What's good, everybody? Happy. I'm here. Happy Monday. Welcome to the closing beat. Just excited to get started today, man. Just for whatever reason. It's all caught up and ready to roll. I hope you're having a great day today. This is our closing beat. It's just kind of a fun way to talk about the overall stock market for the day and what's going on there. We will cover everything, but on the screen you're actually able to see the major indices, everything looking positive today, hitting record highs. We'll cover everything as we go. I do appreciate you watching there. Somebody's been messing with my little stand here. All right, anyways, hey, wanted to just update you real quick on the comments in the YouTube and stuff. I usually respond to those. I'm pretty good at that, but we're switching this sort of archive. For those of you that don't know, you leave a comment, it gets archived in 2 different locations separately and saved for I think 7 years now, 5 or 7 years, per regulations. We're switching to companies that we use for that, and I didn't want to get in trouble for saying something, and then we switch, and it doesn't get archived. So we're all good now. I'll be leaving comments there. Happy to help if I can keep up with all the comments there. Anyways, hey, we're almost to the end of the month, right? The markets had a great April. All of our customers know exactly why. April's a great month to be invested, not because of my opinion, but from statistics and history to actually show that. So we did that in our portfolio update. And this portfolio update that we do every single month for our customers is going to cover the old sell in May and go away. I'm going to prove to you why we just need to tweak it a little bit from the data, right? I'm going to show you everything from history, none of my opinion. I'm going to show you exactly why people get that just a little bit wrong. It's close, but selling in May and going away would actually hurt you in the long run, and I'll prove it to you. Hey, this week in the stock market, it's a big week for news. We got the Fed rate decision on Wednesday, which really is not so big because there's a 97% chance they're going to leave rates exactly the same, not change anything. The focus will be on the wording, though. You've got the unemployment rate on Friday. You had some spending numbers come in today. I'm going to stop on this for a second. Remember the GDP numbers came out on Friday, more than beat expectations, 3.5 versus 2.8% growth. And all the media, and I pointed this out, all the media was like, yeah, but no, Trump's not doing a good job. What really happened is, people like the inventories, right? They picked on the inventories, like this little line item in there to say, well, the inventories are increasing, so really it's sort of like a fake number. It doesn't really apply. All right, fine. So we pointed that out. Today, more economic numbers came out to say that personal income reduced. So you're feeling it out there. Let me know. Leave a comment. Are you feeling your income sort of drop a little bit? Less hours at work, less opportunity for a higher salary. But your personal spending hit a 10-year high. So on average, people are making less, but they're spending more than they ever have on cars, by the way. Come on, man. If I could put my financial advisor hat on, which is what we do here at Jazz Wealth, and help everybody for a moment, this is the time to save. This is not the time to go buy a new car, a new house, go on vacation, do whatever. This is the time to build the war chest, right? Because things will calm down. The world's not going to crash. The world, the economy's not going to just go to hell all in one day. But all of a sudden, you're going to notice that people are getting laid off, and that may be you. And yet you're buying new cars, right? You're spending more money than you ever have. So now's the time to build a savings account for when things get rough. Let your neighbors buy the new cars and everything. Buck the trend a little bit and go the other way around. Now, part of that number could have been gas prices. Gas prices have been higher. Average per gallon, I looked on AAA's site today. Average price per gallon, $2.89. So it could be that we're spending more on gas, not by choice, but because the price has risen a little bit. But you remember, if you watch looking at all these earnings reports, I've been pointing out who's been raising prices. And you guys have been paying it. Kellogg's cereal, raising prices, you people are paying it. Ford, raising prices, you guys are paying it. So there's that as well. When the consumer says, I just can't pay that much anymore, then we start seeing weakness in the markets. Okay, let's move on. I just wanted to throw that in there real quick. Here's the markets. You got the Dow higher by 10, still lagging behind there. The S&P and the Nasdaq made new highs today, new record highs, by the way. So all looking good there. It's a big week, like I said, for econ numbers. I mentioned those that are coming out. Consumer confidence comes out on Wednesday as well. But it's also a big week for earnings. There's 150 names that are going to report earnings this week. We had 21 just this morning, and a quick track of that shows that 61% beat on earnings, 51 beat on revenue. So still keeping right in line. Earnings season's basically just sort of doing okay right now. In the S&P 500, 231 names have now reported, minus who reported after hours today. And we maintain that 78% beat rate, which is average. It's not great. It's not above average. It's just kind of stuck right in there. Revenue's getting a little bit better. We talked about that on Friday. I won't bore you with the details. Do you like that stuff? Do you like when I cover that? I don't know. It's hit or miss, right? You let me know what you think about that stuff. Okay, look, earnings-wise, there's a whole bunch of names, and I could cover all the different names. I printed out my sheet. It's stuck back there on the printer. Apple's the big focus. Going into tomorrow, you got Apple. So a couple things here. Let's just go over to the charts. We're going to take a look here and make this a little more interactive. Apple's done well lately, right? So a lot of you mentioned this one during this uptrend here. Things are looking good. Tomorrow they're going to report earnings after the bell. They expect $238 per share and revenue of $57.5 billion in a quarter. $57.5 billion. That's a high number if you're not familiar with everything, how it's going on. Now, Apple has a really strong track record of beating earnings, by the way, so on that front, looks pretty good. 77% chance they beat on earnings. They've actually only missed earnings one time in the last 5 years, and that was this exact same quarter that they're about to report, but in 2016. I believe they missed by 11 cents. Here's why it's such a big deal market-wise. There is I don't know if you guys track this stuff, but here's VGT. This is a Vanguard ETF for tech stocks. VGT last week saw its biggest inflow of money ever, right? So I mention this from time to time. I really want to start talking more about this, but the amount of money that was used to purchase VGT shares was the highest ever on record. I believe these guys have been around since 2004. That gives you a hint right there because VGT is 15% Apple. Also, XLK, it's another ETF you can use. They almost hit record inflows there. This is the most popular, I believe, tech ETF. A little bit different weighting here, but you can still see doing well there. Almost hit a record for new inflows. The Nasdaq, well, you know how the Nasdaq's doing, the QQQ. That one almost hit new records, although this is a behemoth, so this one's hard to hit new records here. But very, very large inflows. Why? This happens around Apple's earnings season. So if you were one of those people that said, I bought some VGT, Dustin, I like my Vanguard products, I bought the VGT, I hope you like Apple because it's 15% of what you just bought. If they don't do well, if they miss, if they disappoint, if revenues come in lower and Apple tanks, that's why you've got the Nasdaq, your tech sectors, your VGT, if you're participating in that, they're going to take a little bit of a hit. So not that that's a bad thing. Maybe you're a long-term investor, but just a heads up how these things work. When you go out and buy your old VGT or XLK, know what you're getting into because it could be a bit of a problem if Apple disappoints. If they do well, then everything should be just fine. Financials broke out today. New highs here for the large financials. XLF is a symbol I'm using to track that. And regional banks, they did well also, but still stuck. We got a little price resistance here. They were closed above the 200-day here. That's the first time this year they've done that. That's a great sign. But still a little price resistance overhead. Banks are doing well with all this economic numbers showing that everything is doing well. Also, utilities, I'll point out to the downside there. Remember, this sector has been overpriced right here, not at the tip top, but 2 weeks before hitting the highs, it was hit its overpriced from a forward PE standpoint. It became overpriced, and this sector has a very specific history of pulling back after that happens. I would say that's not bad, actually. I mean, it hasn't pulled back a whole lot. It's basically down just a little bit, but utilities pulled back here just a little bit on the day. You can see by our watch list here in the dojo, if you're one of our customers, you can go right in here and play along with me. You have your own dojo available to you, but basically the banks and oil up near the top there. Retail kind of interesting, it just feels like it wants to break. Don't you feel retail just really want to break out of this range? Do you stare at this every day like I do? Get a life, Dustin. All right, Tesla, they were in the news today. Elon Musk settled his dispute with the SEC, so he will not be going to jail or be held in contempt of court. So stock a little bit higher on the day as well. A little news over the weekend, and keep in mind, this thing was waterfall drop. I talked about it the last 3 days. Waterfall drops, what everybody's been looking for. The people that have been looking to buy this thing have been waiting for this drop. So you got a little bit of bottom pickers in there today with Tesla. Oops, that's not a ticker symbol, and it's going to tell me that's the case. Restaurant brands here. These guys, Tim Hortons, right? This is the main focus here today. Restaurant Brands International down about 1.5%. Tim Hortons slowdown in sales, so the stock price was a little bit lower. They missed on earnings, missed on revenue. Wow, where are my typing fingers today? Disney a little bit lower. It started higher again. If you're familiar with candlesticks here, take a look. It started up here today, right? Now, this is very extended in the short term. If you're not familiar with what all this is, all of our customers have 3 candlesticks classes available to them in the dojo. Right in here, you could just click in here. You'll click on Video Library, and you can watch them. But basically, this is a, they call it, the day traders look for it as a short, right? I forget the name of it while I'm talking here, but you have a stock that's moved rather sharply to the upside and then gaps higher. See what happened on Friday there? It did gap a little higher and sold off in the morning. Today, gaps higher, sells off throughout the day. Those are your day traders and your short-term traders going, hey, that's a short. That's a play to the downside during the day. So the stock price a little bit lower despite the Avengers Endgame just killing it in the box offices there. What was it, $1.2 billion in 5 days? Something like that. You guys know more than me. I don't really watch movies there. What I noticed was JP Morgan upgraded the stock today. $150 is their price target. We're basically there. They had to upgrade their price target because they chose 137 as their previous one. So they did well, right? JP Morgan did a good job there as far as their analyzation. Spotify had earnings today. Here's the problem. Spotify loses money, right? I just don't get it, right? They lose money. It's a tough one to invest in. It's a $140 stock. They said, yeah, but look, we lost money, but we have 100 million paid subscribers now. That's the problem, right? So you got a lot of people going, okay, 100 million paid subscribers. Some analysts were like, that's great. Okay, cool. Now they're going to make some money. The other side was like, it took 100 million people to pay for this service for you to make a profit, or not even make a profit, and you're still losing money? That's a negative one there. Spotify, by the way, did their direct listing on the New York Stock Exchange. And who was it? Slack is going to do the same thing. So you'll notice that coming up. Slack's got an IPO coming up. They're going to go directly to New York Stock Exchange, skip all the underwriters and everything. Sort of controversial there, but you'll hear more about it in the news, I'm assuming, as things catch up there. After hours here, you got Google, or Alphabet is how you say it. They reported earnings. I believe the stock's down just a little bit. They missed on revenue. Now, Friday we talked about, I believe Thursday and Friday, we talked about the strong dollar. Dollar getting stronger, that's going to put pressure on some of these global companies. Google has already started to suggest that in their earnings report here after hours. We'll talk more about this tomorrow as I can look into it, but so far that's already starting to be a little bit of a problem there. Western Digital, sort of similar. They missed on earnings. They missed on revenue. They missed on earnings by a mile. If you're a Western Digital person here, it's going to be a little bit of pressure going into tomorrow. Did you buy some Lyft? If you bought Lyft on the IPO, you're a happy camper today. Strong move, up about 6%, headed back to these prior highs. I don't like it. I'm not pointing it out. I did a video on Lyft and what problems they have there. But a strong move today, trying to come off the bottom. A little bit of bottom picking there. Intel also holding back the Dow, holding back semis today. Just continuing to sell off from the earnings. Right, $50 is your price target on that if you're looking for support. So about $50 is where everybody's at. If I go out to the 1 year, you can kind of see right about in here, this prior price support in there is what everybody's looking for. So I hope that helps you there. Other than that, pretty quiet day. I mean, it was a good day, just sort of quiet. If you like the the dollar versus the euro, I don't follow Forex much, but I keep noticing that is in a sort of an overbought kind of a condition there. If you're a Forex person, you'll know what I'm talking about. See if that's something you're interested in. If you're a futures person, I find this fascinating because this is like the mini options that they used to do. The micro, what are they calling them? Micro E-mini futures are coming out May 6th. Expect that to build in the media a little bit more. So if you like trading futures, you're going to get a little less, you're going to get a fractional product to be able to use, very similar to options there, which was a big failure, by the way, to do those mini options. Also, WeWork looks like they're next in the IPO. They filed for a confidential IPO. I don't know if you know what these guys do. Same thing. They lose money, right? They lose a ton of money. I'm trying to find it while I'm talking here. So they're going to no timeline on the IPO. They lose $2 billion on revenue of almost $2 billion. They bring in $2 billion, they spend the $2 billion on something, they lose an additional $2 billion. right? Ask yourself that before you invest in some of these companies, like Uber. Okay, so that's all I have for you. A short one here today. It's been a busy one. There will be a lot of earnings for us to talk about. We'll focus on Apple tomorrow after the earnings. All right, let's see. If you have any questions, I'll try to help you out there. You bet he doesn't like Pinterest moving too fast. Let's see here. Pinterest, really good start. I didn't see that today. So a very, very good start for Pinterest. Yeah, I mean, I think Zoom sort of won the day there on the day of the IPO, but Pinterest is doing well. I just don't do IPOs until after 200 days. It's just, you know what I mean? Like everybody's got a thing that they won't do or they don't like. That's just my deal. I don't do biotech and I don't do IPOs within the first 200 days. It's the data, right? Yeah, there's a nice little move there if you're active, but how many times can you replicate that? That's rare, as you've seen. Yep. Yeah, Tesla, same thing, Kirk. I agree. Nice. Well, Facebook they do all right now. Facebook, that also had a rough start. If you go back to their IPO, that was good stuff, right? As far as the pressures there, basically broke the Nasdaq. I'm sorry, the other one. Yeah. Let's see, any questions? Square comments, please. Square had a good day. Yeah, I kept looking at that one. It kept popping up on a little bit of the radar here. So Square trying to move back up into the upper end of a downtrend there. They've got a lot of work to do. Remember, that stock was very expensive for a while. So that's the epitome of too far, too fast. If you go back to last year, about the summertime of last year, that's a great example of too far, too fast and how it calms down for a while. And that pullback is not usually a reason to go, rushing into the stock. So yeah, what was the question? Monday. Competing with Venmo and PayPal. For now they're fine, right? Venmo's not profitable. It's just they haven't figured that one out. Although they do charge, so they're working on it. That's the competition there. But for now, I think Square's safe. You could look at that as a little bit of a discount, right? You see where it's trading. So yeah. Here, I'll tell you the problem I have with some of these real quick. The problem I have with some of these is the relative weakness. These become focus stocks when the market gets weak. Right now, everything's rosy. The market's moving higher. People will give this a temporary pass. When the markets pull back, even if just a little bit, let's say May is a weak month, just a tiny little pullback here. These stocks that have not rallied with the markets, they tend to be the ones that get hammered. So that part bugs me. There's a lot of names out there that are starting to do that. That one kind of bugs me a little bit. If you're holding it though, if you own it, I'd have no worries just sticking with it. Maybe it gets a little rough, but no worries sticking with it. Roku, what's the question on that one? So Roku's done well. Yeah, I mean, this most recent rally takes it into a bit of a resistance area, so you got some, they would say, headwinds in the short term, but no problem with it overall. If Apple falls on earnings, are we done? Oh, with the rally, this most recent rally here? I think it depends. If it's a whole rounded out miss, everything is just not as great and rosy as it seems, okay, yeah, that could be a bit of a problem. But investors are so focused on their services category, which is growing really nice, as long as that part of it does well, they'll get a pass on the rest of it. That's my opinion. I don't bet on that or do anything with it, but that's my opinion because everybody, they just care about services. All the other stuff is like, oh yeah, good job over there. Oh yeah, I sold a few more phones. That's cool too. Services did good, even by just a little bit better than expected. Celebration, fireworks, everything's good. So we'll see. I mean, it's hard to guess. You got the stats on your side, right? 77% of the time they beat on earnings. They figured that game out pretty well, obviously, but we'll see. And that'll be tomorrow after the close. So if you're just tuning in, Apple reports tomorrow after the close. Yep. You got it. All right, I think I've done okay. Not a bad start to the week there. I hope it helped you in some way today. If it did, maybe you'll hit the subscribe button. That helps us out. I don't know how yet, but it helps us out. And if you need help with your investments, we teach. We're a financial advisor that just likes to teach. I think we're going to do our portfolio update this week for our customers. Lots of great stuff, man. You think this is sort of detailed, you got to come to one of our portfolio updates for our customers. I can't make it public because it's it's data that's geared towards customers. I'll get in a lot of trouble if it's public, but maybe someday I could like touch on an older one. That's probably what I could do. Anyways, that's it. I'll get out of your way here. Enjoy the rest of your day. Thanks for watching. See you soon.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.